Hey there everybody, welcome back to FinBear channel. This video is dedicated to one of my coworkers, Carson. Carson, if you're watching, hey, give me a raise. Uh, so anyhow, he and I were discussing earlier today about his buddy and how his buddy is really into Tilt Holdings. Previous to this conversation, I never heard of Tilt, and I was just curious to see why his buddy was so passionate about Tilt Holdings. So here I've got their main page for investor relations pulled up right now. And it just gives you a good idea of what the company is about. And this is something you want to do. At least it's what I do when you hear about a company you don't know anything. Like, let's hear what they have to say first. So their company profile, Tilt helps cannabis businesses build brands through a portfolio of companies providing technology, hardware, cultivation, and production. Tilt services brands and cannabis retailers across 35 states in the U.S., as well as Canada, Israel, Mexico, South America, and the European Union. So far, I'm liking what I'm hearing. They're well spread out. I have some concerns about finance. Are they able? Do they have the infrastructure and the team behind them to be able to handle an area that broad by servicing these other services? But I'm interested, definitely. Want to look further, of course. Um, so let's see what's going on here with their quarterly results. So the quarterly results are telling me they got $46.8 million in revenue this year, which is a 15% increase year over year and 11% increase quarter over quarter. That's nice. That has my attention. Um, that's a good, solid, growth, especially for a small cap company. Looks like they're doing some things. 6.2 million record adjusted EBITDA of a 6.2 million, up 28% year over year and 36% Q over Q. That's pretty darn nice as well. And so here we got 205 to 210 million 2021 guidance of revenue between that amount. So that looks good to me. I like those numbers. Sign me up. So I have this information and I wanted to see what Ortex had to say about it. So I went to Ortex, and so what's interesting about this company specifically is that it is an over-the-counter stock. So it's not traded on the New York Stock Exchange. You have to get it through a full-time broker. So like I was able to find it through Fidelity because I do use Fidelity. Webull did not have it. I don't use Robinhood anymore, so I have not looked there, and I highly doubt Cash App has it for those using Cash App. So far, Fidelity is the only one that I have found that does have it, that I use. If you know another one that's, another broker that does allow it, please let us know so we can, if we're interested in it, we can look into it a little bit further and possibly purchase it. But for those of you who don't know what OTC stocks are, I pulled up Investopedia. This is a really good resource for everyone to use when diving into the investing world. When you hear stuff that you're like, okay, what the heck does that mean? Use these resources. Google it. Google is my best friend. I use Google so gosh darn much. I've actually, strike that. I use DuckDuckGo, but same thing. So here's what an OTC stock is. It counts as over-the-counter stock. So it turns out that tens of thousands of small and micro cap companies are traded over-the-counter stock all over the world. Over-the-counter stocks don't trade on regulated exchanges because they don't meet the listing requirements that those major stock exchanges have. That's why there's not too many less than $1, especially less than 50-cent stocks available on these exchanges. They have to have a certain amount in order to continue to stay on those exchanges. That actually makes me circle back to CTRM, the bane of my existence video. If you check that out, with how they are always doing reverse splits of their stock, they continue to reverse split and then split their stock over and over again to maintain a price point above what the limitations are for those exchanges. So some little nugget there for you. But anyhow, back to, Tilt. Many companies that trade over the counter are seen as having great potential because they are developing a new product or technology or conducting promising research and development. So OTC stocks, which are penny stocks, is a really good way to get on the ground floor an opportunity. There is very high risk to it as well because it's the ground floor. Sometimes, the Wright brothers, they didn't always take off. It took how many times for the Wright brothers to actually take flight? The same could be said for investing in penny stocks. So here are the key takeaways that they had at the top. Over-the-counter stocks are known as penny stocks because most trade for under $1 per share. They can be traded through a full-service broker or through some discount online brokers, hence me having to use Fidelity versus Webull. Prices can be tracked through the over-the-counter bulletin board. That I don't know. I'll have to look into that. But that's a little bit for OTC. So we're going to go back to Ortex. Right now, Ortex is reporting that it is 4.86% utilized, which means that there are a lot of shares available for grabs to be pulled. When I look back at this, I believe it has so you see shares on loan, there's 316,000 shares on loan. But I want to see what the full float is. Bear with me. For some reason, when I record, my internet gets super slow. That's really helpful, right? Okay, scroll down on Ortex. And this is Ortex for those of you who have not seen my video yet. I am using the free trial that works for 7 days. It is a solid alternative to Bloomberg Terminal. If you're not familiar with Bloomberg Terminal, it costs $20,000 a year to have it. It's tier 2 data for what's happening in the markets. Ortex is a really strong competitor and alternative to that, and I believe it's $79 a month. I'm waiting to see if they have like a Black Friday discount like TradingView does, which is what I use for my charts. So we scroll down here, we got 324 million outstanding shares. I like that. They're not over diluted for a small company. Sometimes when I see these shares, they've got billions. That's a lot. I like this number. I wouldn't mind seeing actually a smaller number, but as they grow, okay. So let's look at the chart. On the chart, we can see, if we go back, I'm going to make this smaller. So they went public, it looks like, right here. So they went public in December of 2018. And when they went public, boy, did they jump. I don't know why it's doing that. It's weird. Yay, I'm a professional, believe me. And I'm making more lines. That's awesome. Okay, I think I have it up on this chart too. No, I don't. Let's move this to the daily. And see how long that will take for us to load. And this is TradingView, which I had just mentioned previously. Whew, all the pretty colors. All the pretty colors. Okay. So, as we were saying, they came out in the scene in December of 2018. And as you can see from the chart when we zoom out, they started about around these green lines here that I've made my little bars. They started out up here. They came down. So they were about $4. They went as high as $4. They came all the way down to about, what's that, 30 cents. Moved back up, and there's a lot of volatility when they first IPO'd. And then over the past few years, all the way to March of 2020, they finally hit what I think is going to be their lowest low, their all-time low. So from there, because I'm only going to look at this on a daily chart because I feel that if I do get involved in this, it's going to be a long-term play. Because again, I am long-term bullish when it comes to cannabis stocks and anything involved with cannabis. So as we see here, came all the way down to this all-time low. Then they hit a new high, because this was the previous high. They hit an all-new high. Now they've hit a new higher low compared to that all-time low, and now they have beaten that previous high. So I am excited about it. I like that. I think that right now I might be at a good entry point. I think that it's showing us that some changes have happened. It looks like back here, I didn't read a lot about their history. There isn't much out there aside from their website that I personally see. But it looks like maybe they had some management issues or what have you that just made them just plummet. But it looks like they have rebounded, and they've got things going in the right direction. So what I have here is a little bounding area. So I drew these lines a little bit earlier before I turned on the screen, just because again my internet likes to go slow for some reason. So here we shot up, we hit it high, we tested it about 3 or 4 times here. And this was also an area of consolidation here as well, of support before it plowed through it. So this is a nice area of support. Now it's kind of a resistance again. Well, actually, I'm sorry. It was a resistance. It's the end of the day, guys. So this has been a resistance. 1, 2, 3, 4. Came down, regrouped, shot back up. Almost touched that resistance line, but didn't make it. Shot down to the support line where we see some good support. Shot back up, broke that resistance line, and now it has come back down below, and now it's resistance again, but still wanting to hit it. We hit this support line here twice, so this has proven to be a decent support line for us. So I have a feeling this thing might yo-yo and channel a little bit within this range before breaking out again. So if me personally, I'm not too familiar with OTC stocks. I'm going to look on Fidelity. I don't know if I can do a buy limit. I might make a buy limit a little bit lower, but honestly, what's the price at right now? 54 cents. What's 4 cents, honestly, for me? If I have to do a market order, I'll do a market order and get it for 54 cents. I can throw 50 bucks at it and see it grow. And who knows, maybe in 5, 10 years, that $50 at 54 cents could be trading at $7, $10, $13. And I'm being very conservative at that. I do see a lot of growth potential in companies that are in this sector, and I find them interesting. So that's my take on it. I'm not a financial advisor. I'm not a professional at this. I am learning just like you are. But if I have $50 to throw in it, which I do, again, I'm a small liquidity, small cap person for myself personally, so I don't have a lot to throw at things. I feel safe putting $50 in this. I feel safe that that $50 will at least grow to possibly right here, 85 cents. I think that since it's already tested this before, and the information looks good. They did have an announcement that they are repaying loans, which is a good sentiment fundamentally. I don't think 75 cents is a far stretch. So if I take my $50 at 54 cents and I go to 75 cents, that's good eating. That's a good return on investment, even if short term of a few months. So that's my thoughts on it. Let me know what yours are. Let me know what research you've done. Carson, I hope that I did your friend justice in presenting this opportunity for people. I understand why your friend is probably very bullish on this. It looks like they are in recovery mode and they're showing a strong, healthy growth. Not every stock is going to be a short squeeze play. Some of them are just organic, fundamental growth. And if you believe in the company and you believe that price is going to go higher, go for it, you know? So that's my thoughts. Please hit the like if you enjoyed this video. Please hit subscribe if you really enjoy some of the other videos I'll have. I think I'm going to be doing a couple more on Tilt just to see what's going on with it. I think it'll be fun to watch and see what happens. And I love seeing a success story. I've already said before, I am a bullish investor. I don't feel comfortable going short on a lot of things. There's enough money to be made that I don't have to do that. So there's my take on things. I hope you enjoyed it. Have a wonderful day, and let's go make some money.